Hey everyone, and welcome to the PivotBoss Closing Report for January 25th, 2016. I am Frank Ochoa, aka PivotBoss, with your analysis for the upcoming session here. Taking a look at the ES, one thing we noticed here before was that we'd obviously formed that major tail event here. And what I was talking about before was any bounce off of this, or rejection off of this 1846 LVN likely sparked a move into 21 and 39. So that's our primary thesis here. This morning during pre-market, I talked about 1882 to 1879 needing to hold today. And 1882's held very solidly for most of the session before it eventually gave way and then price dropped downward. So I would say that here any close below that 79, right, breaking below that 79 suggests that right now we need to be out of that move and have, obviously we already had scales out of the first day, any scales and trailers the second day, but below this level, hopefully you're out. If not, you still have opportunity to get out unscathed. I would say that any push into 1846 offers an opportunity to redefend for bulls for a shot higher. I could see this thing going down even lower than that, but we'll see how this plays out. Overall, I still think 1830 to 1846 is a key level for swing bulls to defend. It's just you don't want to write it down while in a position. Let it come down and then re-engage the trade. Now, overall, obviously we have an upper trend line that has crossed across these highs here, and basically that line has been in full effect so far. We still have a pattern here, 4 days worth of higher highs and higher lows. And so that's still in effect. So it's still feasible here or possible that price could remain above the 100% expansion target of 1869 and shoot into new highs here, closing back above 1900. We'll see how that plays out. But overall, I wouldn't be holding on to this at all. I would be out and holding on for a retest of that LVN for a shot higher. Now, if we take a look here at the intraday time frame for the ES, you can see one thing here that stands out. This is a 10,000 volume bar chart, and one thing I talked about was failure to hold 1879 opens up a move to 5-day VPOC at 1865. 5-day VPOC shifted up to 1890 and then traded around that VPOC throughout most of the session before taking it offered. So the VPOC, 5-day VPOC shifted up, value shifted up, and then the market took it offered and is now dropping back toward previous value here, and that's what we talked about pre-market. Now that's important because if the market is offering higher value on that VPOC shift up, we could be looking at a major test here, and if it doesn't hold, we could be looking at another markdown ahead. So bulls really want to defend 1865 value for a shot at higher highs. That would be in line with the current upside trend line here of this channel. But failure to do so opens up a path to another move into 1846 to 1830. Okay, taking a look now at crude oil. Crude oil here, we had this one pegged. Obviously, this one's been trending lower. And we had a 2-day bounce here, but nobody believed the bounce. Pre-market, we talked about failing to hold above the previous week's high of 32.35, and that suggested a move back into 30.14. We got that move. I talked about 30.14 being an area that bulls wanted to defend for a shot higher, but failing to do so opens up a push to new lows, and it failed to hold below that 30.14. So another one here where price comes into the stacked and sloped pivot-based EMAs and is rejected here. The rejection above the previous week's high price was a big-time call there because if you're going to reject at a previous high, so let's put it on the frame here. Here's the previous week's high price. If you're going to reject the previous week's high in a downtrending market, the expectation is that you're going to retest the previous week's low. So that could be a big time move into the previous week's low ahead at 27.56. Now if we drop into the lower time frame here, something that was important and we talked about in the trading room today was this failure to get above the previous high. We talked about it pre-market, led to a big move down. But when price rallied here and retested VPOC after taking it offered earlier in pre-market trading and overnight trading, that was an indication that the market was going to offer that zone, keep it offered for a shot at seeing new lows, and that's exactly how this thing played out. So this one, very similar to the ES here. is seeing value go offered after a big shift up, and that's important. So here's value at 28.36. You can see how it went bid here. The retest was also bid and price rallied. VPOC shift here to 31.63 and price went offered through it pre-market, came back to it and was offered again for a round of new lows. And that is price being offered. And when you're offering a value at higher price levels, the expectation is that you're going to continue your downward price discovery phase to either prior value or to create new value. So the expectation here is that if 5-day value went offered, expect a move, and a continuation is at 28.36. All right, now taking a look at gold. Real briefly, we were looking at gold. This had a rounded bottom here, a pullback to retest the 1072s, and now a bounce to highs here. I mentioned if gold can hold above 1100, that would be solid for a continuation into these upside targets at 1123.80 and 1130. We had a double inside day here where we broke that to the upside. So I would say a retest of 1100 to about 1102 offers an opportunity to defend and squeeze. Let's take a look finally at the NQ. Here's the NQ in a daily time frame. We talked about the rejection tail here, big time tail event. Here's a significant LVN at 40.72, which remains a key level for bulls to defend. We talked about any pullback into 4,200, offering an opportunity to defend and squeeze, but below 4,200 could lead to a return to 40.72s. So right now, this rejection at above 4,200 is important to watch out for. I would say 41.74 is a key level, but this LVN is probably a better spot to watch to see how price responds at 41.50, because if it can hold that zone, you could see the squeeze, but failure to hold above this 41.50 really opens the door to a retest of that 40.72, because it's going to auction through that acceptance into the next rejection zone before seeing strength. I would say that 40.72 is a significant level, so even if price does come into this area, watch for OTF responsive buyers, because they could defend here again for another push higher. Sometimes you have to get that significant bottom, and then you have to come and get that double clutch here before you can go up. This could be a shakeout phase here as price comes back into the zone and offers another opportunity for bulls to come in and defend the LVN. So we'll see how this plays out. Overall, failing to hold above 4,200 implies that you're likely going to see more of a pullback. So you don't want to hold through this pullback. You want to be scaled out and then look to reestablish a new entry from there. All right, now if we take a look at the intraday time frame for the NQ, here we are. Now this is something very similar to the ES and crude oil, where 5-day VPOC went offered here at 42.35. Now 5-day VPOC being offered up here led to a move back into 41.87 with a shot to see a push into 41.43 in overnight trading or early in RTH Tuesday. Now we had 5-day VPOC right here. That was the area that went bid that led to the recent push higher, but failing to hold above the previous session's high twice in a row on this session led to a big time slam in price, and we could see a further push into that 41.43. Now overall prices have been holding and in a higher price pattern with uptrending price structure. I mentioned before that this 40.72, even as low as 40.60, still remains a significant area for swing OTF bulls to defend until it's not there anymore. So right now the pattern still holds. Again, you don't want to be a holder through this. You want to be able to hold off until you see any kind of strength in that zone, and then you can take it off that strength. But otherwise, we're looking for a short-term push lower. You want to be either a bear during the short-term price swing lower, but look to pick it up on a lower basis if you're a swing bull for a continuation higher. All right, that's it for now. Let's see how this thing plays out heading into Tuesday's trading. Good luck and trade well.